So hello, Face Warriors. How's everyone doing today on NFP Day? Everyone doing okay? Hi, Dennis. Yeah, we'll answer questions on, equities based upon the indexes, and I follow some equities here. So let me just make myself the presenter here. Or am I? Maybe I am.
You are
You
not.
guys see the euro? Hello, Forex Gal. All right, so okay, thank you, Blake. I still think I still think that the euro has further to fall. One of the reasons would be euro pound. Euro pound, I still think is.
Oh, presenter. Sorry.
Oh, okay, buddy. Thank you. All right, so euro, I still think this could be a failing rally, and we could work lower to under 115, maybe 114.50, and that little Dixie chart that Paulie and I were just talking about. If we got up to those levels, that would take us down to about 114 in the euro. So when EG is heading down, my preferred shorts euro, preferred long is the pound, and everyone here in the house has been pretty constructive on the pound. Great call yesterday with Blake milking US dollar yen to the downside. That was before the stock market started getting some selling pressure. I don't think it's over. I'd sell rallies in here, maybe back to 111. I think these lows will be taken out. And I think stock indexes, when you look at what kind of week they're having, even if you're a long-term bull, and I'm not saying we can't have new highs, but look at that week in NAS. It's not the best signal. Almost looks a little bit like this, where maybe we have a 2-week shakeout towards 7,000 or so, and then we blow again. Actually, what turned out to be the strength was the Dow. Look at the Dow. It's about unchanged on the week. S&Ps are under some key support levels that Blake brought up and Steve brought up, back under the previous highs of 78. And we'll see if it can hold this 2850 level. But your relative weakness on a percentage basis, which I think is kind of a harbinger, even though this may not, most likely isn't the top, but the kind of percentage moves that we're getting in NASDAQ, and I showed you guys the stocks yesterday, and it absolutely got crushed yesterday with Micron and everything. That's a big part of NASDAQ. Amazon probably makes a new high, but could still have some downside left. So I'm looking at some more follow through. I wouldn't be surprised. Actually, I think there's a chance in NASDAQ for 7,000, 6,900. Down towards this moving average here on the daily, here's a 200. We have to penetrate the 74. And then I think we could make another run. And I wouldn't be surprised if we make another run. And I know a lot of S&P bulls are looking for prices to pierce 3,000. I wouldn't be surprised even when the NASDAQ makes a new high that it's going to be more labored, because there's plenty of damage being done. You already have Facebook in a bear market. A lot of damage done. This is a pretty negative 3-day period, and if we break this moving average, really, we can make a move towards the 69 level. That's my target, and then we'll see. I don't think we're going to get the move to 5,800. Steve showed that, but I think we definitely could get a move down here. And NFP, they're probably looking for a stronger number. I don't think the ADP shook the predictions that people have on that. So with that going on, I think there's another 100 pips to the downside in EG, maybe 88.40. And if the number comes in light, I'm looking to sell euro on strength. That's my view coming into today. So why don't we get Blake in here so he could say what he needs to say and prepare you guys before he has to get back to pushing buttons to make a living. So how are you, buddy? How are you, buddy?
Good. You were just talking about the moving average in the NASDAQ. I'm going to show you something that one of the my contacts that I used to trade with, who is he's by far he's the best current trader that I know, not the best trader I've ever known or the best trader that has been, but the best trader that I know now. He slings like the biggest size and does extremely well for himself. But he trades mostly equities.
Yeah.
He's one of those guys. Anyway, I talk to him pretty much every day. We chat now on Bloomberg. We talk back and forth, and we were both long the cable yesterday, and long some Canadian dollars, and we talk about whatever we talk about everything. We vacation with their families. Our families, okay. Same age, whatever.
So are these his moving averages he uses?
No, this is not. This is actually okay. This is the S&P, and I wanted to show you the 21 period moving average. It's what he's looking at, and he says everybody's looking at right at this moment in the S&P. Yeah. Because I asked him about the S&P. We talk mostly currencies because he knows I trade currencies, and he appreciates my personal feedback on the currency market, because he trades the currencies kind of like on the side, because he's mostly like he'll take like a he'll buy like 10,000 Amazon. It's crazy. He takes these huge positions, which you think about like Amazon, it's a big friggin' position. He's not buying 50 shares. He's buying big blocks.
$1 million positions.
Yeah, and so, but I like to get his view on on equities, and so he's like, look, he goes, as long as this 21 period moving average holds on the S&P, I'm going to be long. But if we crack it today, and I when I looked at it, I go, okay, that actually coincides right now with the previous breakout point from the highs in August, basically. I mean, we had another high right over here, but you can see the resistance. Les résistance is right here. So, right there. And I think that's what the market is looking at today. He says everybody. So when he says everybody, that means all of his contacts in New York that he used to trade with is also looking at the same thing. So hold on, let me really
quick. Does he think there could be a big crack under that level, or?
Sorry, I just had to peel off a little bit of my cable along. No, but he thinks that's what tilts his bias. So basically, while we're above the 21 period moving average, he's not. He's going to be basically bullish. He went and bought some FANG stocks yesterday, late in the day. He's like, the last 2 days have been the worst 2 days in the hedge fund industry for the last, for this year, just the last 2 days. So he knows that they're feeling the pain, but he thought, it might take a little bit of a bounce day, but he's not married to the positions, and he's looking for a breakdown if we crack that 21 period moving average. Anyway, it's just, I thought it was some very good information for you guys to know when you're talking about risk appetite, risk aversion. Now we had some big news. Let me cover a couple of things before we go into the charts. Barnier, who's negotiating for the EU, says that you can see the comments here. Barnier on border, we are ready to simplify these checks, which means they're ready to make concessions here on the Irish border situation, which is the really last obstacle for a clean Brexit. And what the cable did is it ripped higher and pushed right through the triangle resistance. I bought a lot of it actually on the dip just a little while ago, so I just let some of it go because I was getting long all through here, and I let some of it go because I don't want to be too aggressive going into non-farm payroll. But I will tell you this: if we do have a weak number and the cable breaks above 130.50, which is right here, you can see this blue dotted line. I'll just go ahead and do this. I'm going to add a alert there just to make sure that I go and look at it in the event that we break that. I'm going to get pretty aggressively long the cable. I'm already long the cable. You were talking about the short euro pound. I got really lucky last night. First of all, I've been short this the last 2 days. So I shorted it 2 nights ago. We were trading around this 90.10, closed it yesterday at like 89.82, I think is where I closed it yesterday. I got really lucky overnight and I shorted some at 899.99. So 89.99. I got short some, and then that news hit, and it broke through the support. Now I wasn't expecting the breakthrough support, but now that we've broken through support, I've actually added to the position. So I'm looking for the euro pound to get back to the. You said 88.40, which is interesting. The 88.60 level here, Dale, is the bigger, support. So, and it's 161% extension. So I do expect us to get down to 88.60 eventually, and the euro is trading pretty weak. Koye said that there's a lot of weakness in the eurozone, yada yada yada, and so hold on, I'm going to peel off the rest of my cable here. I didn't expect it to bounce this high pre-NFP. I just sold my pound dollar. I'm still short the euro pound. I just sold my euro. I just sold my pound dollar. Is what I need to cancel that order. So anyway, I just took that off just because I got pretty aggressive down here as it was dipping. I picked up a lot of it, and I put in an active pattern play for the pound dollar, as you can see, because I am now trading it to the long side. Doesn't mean I'm going to be long the whole time, but I'll tell you what, I'm looking to buy it again, especially following non-farm payroll. Now. And one of the things that's going to keep the pound elevated is the euro pound breakdown. Now, I have to say I'm not bullish, or excuse me, bearish the dollar across the board. I'm kind of indifferent going in non-farm payroll. I don't know if we're going to have a good or bad number. The market is expecting around 200,000. I think we're looking for. Let's see, Forex Factory has it at 191,000. Bloomberg here has non-farm payroll coming in at like close to 191,000 as well. All right. So obviously these numbers are going to be pretty important today as far as the headline number, but you got to watch the revision. They could very easily revise up last month's number, so just keep your eye on revisions. And if look, I got a pretty simple solution at this point in time. If it's a strong number, the euro dollar is a good short, in my opinion. Okay, and if it's a bad number, the pound's a good long. It's pretty simple, because you got to break down in the euro pound. So why would the euro US dollar be a good short? Because you have a backstop here. It's at the 618 retracement. So again, if it's a strong number, like let's say the number comes in 220, 225, it's a solid number. We get a good revision. The dollar is going to strengthen. I don't know if I would short the pound dollar. There's a lot of good news coming out of the UK right now with the potential Brexit deal. Why would you want to short the cable? Because we get a soft Brexit. The pound's going to be trading at 140 before you can say lickety split. You know what I mean? So. Yeah. Now, shorting the euro dollar makes a little bit more sense if you have a strong dollar reaction. Now, the flip side to that is if you get a weak data, then you have the cable that's already got some momentum behind it. Then we break this 130.50. We're going to trade up to 132 probably pretty quickly, especially with all this positive potential Brexit news. The market's pretty short the cable. So, getting it to break above 130.50 is not very hard. So on a weak number, I think the cable could ratchet right up there, without much issue. The other currency pair that I have to take a few minutes to talk about before I pass it over to Steve and Stelios today, I got to talk about a couple of them, but the US dollar Japanese yen, obviously the US dollar Japanese yen, I want to point out that we did hit the 127% extension. was really quite satisfied with the way I traded. Well, I can't say I was 100% satisfied. I shorted the dollar yen yesterday. I just closed out early, and it went a lot farther than I thought it was going to go. We did hit the 127% extension, so we broke through this, you know, range low, if you will, which I think now makes it vulnerable. The question is where are we going to go from here? And I think that any rally, you know, if it's a good number, you might see back at 111.20 like this. You might see, you know, something like that. The flip side is if it's a weak number, the US dollar Japanese yen could very easily see the 200-day moving average, which comes in at 109.80, and I think the market's pretty long the yen pairs right now. So, or the dollar yen. So, you know, also one of the other things you got to pay attention to with the dollar yen is you got to pay attention to bonds. If yields drop today, the dollar yen is going to get smoked. Yesterday, the bonds rallied, yields dropped, and the dollar yen just got absolutely walloped. So keep that in mind. Now, the last pair I need to talk about before the data is the dollar Canadian. I was extremely lucky yesterday. I shorted the dollar Canadian on, and if you use ForexAnalytix, you had this analysis really up to date every hour, and I'm gonna walk you through this analysis really quick. I want to read this to you. Okay, so yesterday, Amanda's update: consolidation or bull flag in the making? Question mark. Above 132 may see a squeeze, and below 131.10, 131 take the pressure off the bears. My analysis when I came in, it says dollar Canadian looks to make a move towards the 133 after the breakout of 132.10. So you'll notice what happened is the first chart that we had when this all came out was this one. Okay, whoops, no, was let me get to it. That wasn't it. It was right here. Whoops, right here. It was breaking out, and then that false breakout happened. It said there has been upside follow through with the U.S. dollar Canadian could have been there had been upside follow through with the dollar Canadian could have been enough to grab the stops above. Therefore, you have to be careful of a false breakout, especially if we trade back below 131.90. At that point in time, I actually shorted the dollar Canadian on this false breakout at 132.07, I believe, and then the Canadian broke lower following the headlines from the BOC Wilkins, rallies to 130, rallies at 130.150 will find sellers. Now Wilkins BOC debated dropping gradual approach to rate hike. So the basically telling you the Bank of Canada is not, or is going to be raising rates, and especially if you get a NAFTA deal, we are going to see an aggressive Bank of Canada. So the dollar Canadian actually broke lower yesterday, then it rallied again to 131.50, and then it's already slumping again. So now let's talk about this really quick, because we do have Canadian news coming out. There's probably going to be no NAFTA deal today. There's reports from Bloomberg Canada. There's comments from everybody saying that the NAFTA deal is not going to get done today. Great. Do you think the NAFTA deal is going to get done here in the next couple of days? Maybe even over the weekend? Look, if I was short the Canadian currency, I would not want to be short the Canadian currency knowing how close we are to a deal. On top of that, if we do get a weak US data, if we get strong Canadian data, we have a low bar right now at 5,500 for Canadian data. I know last month was an outsized number, so you're probably revert back to the mean a little bit. But even if we print an inline, maybe even if we create 8,000 jobs or something like that, and unemployment rate does not go up, it instead maybe stays the same, the Canadian could really explode today, especially if we have a weak US data, stronger Canadian data, or even inline Canadian data. You got NAFTA coming up. This dollar Canadian could very easily be trading back below 131. Really, well, we're already at 131.17, so that's not really a big statement, but we could really be trading back below like this channel support, which comes in around 130.75. So look, guys, what I'm trying to point out here is You know, this dollar Canadian, it is weak. We now know that the Bank of Canada is actively talking about raising rates more aggressively, and you threw a positive NAFTA deal in there. This dollar Canadian could very, you know, we were talking about this in the chat room last night when it was trading around 131.50. I was talking with Joe, who is a very active Canadian trader. She is not only lives in Canada, she loves to trade the Canadian currency and crude oil. We were talking yesterday about, you know, repricing. I'm like, look, the one reason why the US dollar Canadian is up at these levels is because of NAFTA. You take NAFTA out of the mix, the Bank of Canada is going to have to, you know, play a little bit of catch up with the Fed. Repricing the dollar Canadian is probably closer to 127 to 130. You know, that means, you know, somewhere down here, this is probably more fair value for the dollar Canadian. It's probably somewhere down here like this. And if on a positive NAFTA deal, we are going to probably trade somewhere down here. Now, does that mean we're going to stay down here? I don't think so, because if we get some risk aversion, then, you know, traders will start buying the dollar again. But I think a positive NAFTA deal reprices the dollar Canadian immediately lower. So, and if you know a NAFTA deal is going to come, maybe not today, but it could be over the weekend. The way things happen with our administrations, you never know. It could happen over the weekend where you have no opportunity to get out if you're long the dollar Canadian, if you're short Canadian currency. You know, if that happens over the weekend, we're going to gap down. And if it happens Monday or Tuesday, we could trade, you know, obviously a lot lower. So, guys, I think the risk here is being long the dollar Canadian, not being short. And so any type of, like, let's say it's a strong US data and weak Canadian data, and the dollar Canadian spikes up to, you know, 130, 160, 130, 170, you think you probably need to use that as an area to actually sell into rather than buying it. Does that make sense? Are you following me, Dale? Am I talking gibberish here? I don't know. Steve, Stelios, whoever wants to jump in.
I'm here, Blake.
Okay.
No, what you have been saying makes absolute sense. Although, obviously, you know, we're going to get a reaction, and, you know, I have absolutely no doubt that the initial reaction is going to be positive. But it also remains to be seen, you know, how positive this deal is going to be, you know, for Canada. I think that's what's going to affect what kind of a follow-through we're going to get.
Yeah,
but yeah, there's going to be a reaction for sure.
100%. And Steve, I'm going to be flipping it over to you. Listen, and thanks for the comments. I do have to get going because I got to get trading this NFP, and Steve's going to take you through the live data with Stelios, Dale. And hey guys, real quick, make sure you visit our partners at Forex Parks FX for any of your broker needs. And also, Steve and the tech team has been working really hard on the new chat room. That we are releasing the new chat room for the ForexAnalytix community. It's built from scratch, so it is really kick-ass. And I think you're going to be launching that around noon Eastern-ish, right, Steve?
Yes, that's exactly the plan. We will switch to it in you know, noon EDT, Eastern Daylight Saving Time. Yeah.
Great. All right. And then just remember that the old chat room will not be available at that point. You'll have to shut down the page and restart the new one. Correct? You can show people how to do that after the fact.
Yeah, we're gonna let them know. Yeah, we're gonna let them know in you know, when once it's about to happen, and we're gonna kick out everybody from the old chat room so they don't have an alternative anyhow. But we're gonna let them know in advance.
Sounds good. 2 minutes, guys. Have a good one.
Perfect.
Good luck, everybody.
All right, good hunting, Blake.
Thanks, Blake. I'm
Thanks,
here
Blake.
as well, Steve.
Same to you, mate. Yes.
Hello, Steve's,
Thank you, mate.
plural.
Okay.
Stelios's, plural.
So, still, you let me know so I can switch to my other router if we have any issue.
Yes,
We will,
sir.
you know, trying to figure this out, as you know. Obviously, the monitoring closely, you know, with the data expected is the USD yen. Usually, it's the most sensitive to react, although lately that hasn't been the case. Stelio, tell me the moment we get the data out. Until then, my first comment is cable. I was mentioning the day before yesterday, and yesterday specifically, that this outside white candle is, for me, it's enough of an indication that there is definitely more upside coming in the cable. You know, yesterday was a consolidation day. We in essence had an inside day, but today we're pushing higher once again, and we're currently testing confluence of resistances. It's this descending trend line resistance. It's also this 130 area. We've said a long time ago that 130, for psychological reasons and for reasons that it has acted as support and resistance multiple times in the past, is a key level. We're now retesting it. Personally, if you ask me, I think that unless we see something like, massive from the NFPs, the cable this time will manage to break above it. So, my intuition tells me that, if NFPs today don't forbid that from happening next week, we should have finally a break higher. And
coming out, headline is slightly higher, 201 versus 191K, but the revision is 10K lower. So headline versus revision same.
Yeah.
Average hourly earnings 2.9% versus 2.7%. That's pretty big. And and CAD employment changes.
That's pretty big, and that's
sorry.
Negative what, Celia?
Yeah, it's negative 51,000 versus positive 5,000 expected. So that's a big swing the other way after a month of where it was very positive. Now it's very negative. So the 2 months together.
And here's the reaction we're having from the USD CAD. By the way, I drew this several days ago. That, in my opinion, if we come back to retest a descending channel, in my opinion, that's going to be a good buying opportunity. So personally, first of all, I have to say that I acknowledge everything that Blake said. There is a danger that we're going to see some big reaction having to do with when we get an announcement of the NAFTA deal, unless it's a weekend, in which case the market will have the time to digest what kind of a deal that is before it decides what it wants to do at Sunday's open. So I don't want to take into account what might happen with NAFTA, because I don't like to play guessing games, but from a technical perspective, test of the 131, that's what I had said, would be a nice opportunity to buy. We almost made it there. We seem to be having a nice reaction high.
Steve, we're losing you for a few seconds at a time. I think you better switch to the other router.
So far, I like what I'm seeing. Now,
yeah.
Okay. Can you hear me?
Sorry. We can hear you now.
Okay, I haven't done anything yet because it needs some time to boot, but on, and you take over when you want, so I can actually switch. So so far stocks are negative, fourth consecutive day lower, and I said since yesterday, I actually even tweeted that from my account, which I don't tweet that much, that Nasdaq was sitting on very critical confluence of supports. Blake showed the channel. Personally, I believe that this is an ascending wedge. This is what we've been following, for some time now. And I think that today is going to be a super critical day because we're actually probing below this wedge, and I do think that if we close below it, that's going to actually be a very good trigger for a big finally a big corrective move to if my connection still has issues, let me know. Because
Steve, I think it's best if you switch, because we lose you not for 10 or 15 seconds, but it's a little bit difficult to follow. So go ahead and switch, and then I can fill in for a bit, and then you can take over again.
And Steve, the gold got to a real critical area yesterday and was rejected. What are you thinking in the gold here now?
I think
it's changing.
It's changing.
Yeah. Okay. I still think there's a shot for 1180. The difference between, me and maybe me 10, 15 years ago is yesterday I probably would have bought the gold because I was afraid it was going to go without me. But, if you have other things happening and other things you're doing, you just say, okay, well, let it go. You know, there's some things going on in NASDAQ and this and that, you know, and, you know, more than not, you're going to have that opportunity if you just sit and wait for your levels. Have you noticed that, man?
Yeah, and you know, Dale, you were talking about gold when it was nearly $100 higher, I think, and you were, you know, you were talking about how you were you thought it was going lower, and between then and now, there have been a couple of, or 2 or 3 occasions where it did look momentarily bullish. You know, the setup looked like it might bounce, but you were, you know, you were consistent, and you know, and you might be right. You know, you might still go to 11,800, 11,850, whatever. Sorry,
actually,
by the way,
yeah, okay. Yeah, actually, so I think 1180-ish will hold, and we'll make a move to 1260 before we go down to those levels. So I'm actually looking for, like Steve, at least another wave. We had $55 off the low. I'm looking for that, or a fib extension from 1180.
Yeah.
So where are you at on the gold, Steve? Would you buy more down there at 1180?
I have established a position, 2/3 of a position already, and you know, I do think that the chances for another push to the upside are high. I think the reward to risk ratio is worth it, so I'm sticking with it for the time being. I can't tell you that I advocate like, oh, this is like a super bullish opportunity, and you know, this is the like, you know, the low of a century or whatever else.
Right.
Obviously, you know, I'm not advocating for anything like that, but I do see the market being one-sided. I see the market being tilted, you know, too much to the bearish side. I do see this divergence between gold and silver. I already see some signs that gold has stabilized and, you know, is attempting to rebound. And, you know, I think it's totally worth it. Now,
Steve, by the way, we can't see your screen. It's stuck. At least that's what I see.
Because I reconnected. I'll, you know, let me tell.
Yeah,
okay, is it okay now?
There you go.
Yeah. Sorry. It's because I got reconnected. Yeah, sorry. So let's go back to what I was saying.
Steve, by the way, whatever brand the router you're using now is, I want to buy their stock because it's working perfectly, and it was yesterday.
Yeah, it's a 4G router actually. Yes. Okay, so we're seeing this very nice. We're seeing this very nice recovery in the USD CAD. So. You know, I think that, you know, until something happens, we need to be cognitive of the fact that, you know, this is a major breakout, and, you know, we might have follow through. Now, having to do with the reaction of NFPs, we obviously see now euro having turned lower, and I do think that there is a decent chance that we're going to see one more push to the downside before perhaps getting like a bigger corrective move higher, before the correction higher is over, if that's a correction, not like a new move higher, but, you know, minimum expectations. So minimum expectations, we had a very big move lower in the euro, and now we're correcting higher. I think that there is at least one more leg missing to the upside at the very least. So I don't think that even seeing like a little bit of a pullback, that changes that fact. Same thing with the cable. Cable is now like receding from the 130 area I was talking about. But in all actuality, as I said, even if NFPs are taken positive by the market, in this case, Stelio, you mentioned it very correctly so, what the market, I think, takes as dollar positive is not the NFP number per se, but it's actually the wage growth numbers. Like, what did you say, 2.9, Stelio?
Yeah, 2.9 year on year versus 2.7 expected. So
yes, so that's actually what matters. And by the way, what's the participation we got?
That's not good, because that went down from 62.9% to 62.7, which is, I think, very
we were
close.
back at 62.7, if I remember, before jumping to 62.9.
Yes, and it's getting now very close to like 40-year lows. So it's not
and the nominal number that came out was what?
Unemployment, it went up to 3.9%. Actually, no, it stayed at 3.9. It was expected to drop to 3.8. So, you know, give or take.
Okay. Regardless, to be honest, you know, 0.1 up, down doesn't really matter, because having to do with the nominal number, it's not that somebody should be expecting something much better than that. I mean, you know, historically speaking, we're at the lows, even though we've already talked about, you know, that some changes have happened to the unemployment numbers as well, like UD6 captures better some aspects. But to be honest, that measure as well is now lower than it was before we got the previous recession in 2008. So, you know, it might not be like the best data having to do with quality, but having to do with employment. I mean, we're definitely, you know, at a good spot. So I don't think the market does care so much about, you know, if it's going to be 3.8 or 3.9 or 3.7 or 4%. I think the market having to do with reacting, you know, with the dollar's reaction cares more about signs of inflation, because as we've said, the nominal CPI has already almost reached 3%, and that's like 50% higher than, theoretically speaking, the target that the Fed has set. That's why they keep shifting the goalpost. They, you know, once they saw that, you know, that's going to be blown through, they started talking about symmetrical targeting of 2% and things like that. You know, we know all how that works. Regardless, what I was saying and what I focus mostly is this confluence of supports, which seems to be breaking lower, having to do with the Nasdaq. And Dale, I don't know if you're still here. If you remember, we were having a look together at a few of the Nasdaq stocks, you know, a few days ago, and you know, we were showing again how parabolic and completely unsustainable, for example, the move in the Amazon has been, in the Amazon stock has been. And, you know, we focused also on the short term, and, you know, we had this ascending wedge, and we got that like move higher, like this overthrow. And now we are like, you know, plunging back within it after hitting the 261.8% extension of this corrective move lower. So I'm also monitoring quite closely this ascending wedge support, because now that we slipped back through within this ascending wedge, and it's obvious that there are risks that, you know, this was simply an overthrow, which happens quite often to ascending wedges and descending wedges. I think that if the Amazon stock slips back below this support, which is roughly, let's say, at 1900, you know, that's going to be another, you know, big headwind for the stock market in general, especially the Nasdaq. But let's be honest, I mean, since the Nasdaq has been the steam engine of US stocks, you know, as you know, as of, you know, a few years ago, I think that, you know, the whole market pays attention to what happens to the Nasdaq. Now, let me go over a couple more things. One of them is the DAX. We said the other day that 12,100 was a critical support, but the most critical is at 11,800. We've shown many times that 11,800 is the neckline of a big head and shoulders formation on the weekly. You can see it here quite clearly. And, you know, what happens from here? If we break below 11,800, to be honest, you know, I wouldn't want to be long, you know, in any way. And one more thing, I want to show the FTSE, because as it seems I was very wrong about the FTSE. I was saying that, you know, I would trust a break higher in the FTSE, given, you know, the momentum and the impulsive nature of the move higher. And, you know, following that, we got like some nice price action that was clearly pointing to a corrective phase. But after what has been happening during the past couple of days, you know, this move has now expanded lower by showing very impulsive characteristics. So perhaps this is something different, like a 1, 2, and this is some kind of a 3. So anyhow, the bullish scenario goes out of the window. So I think that, you know, after this kind of a behavior, FTSE is a sell on rallies. Not that I ever came close to buying it, because, you know, for me to do that, I would need to keep on seeing corrective price action and finally a break higher after like a period of consolidation. But, you know, I'm not even looking to do that anymore, because, as I said, after the last 2-3 days of price action, you know, the technical picture and the structure has completely shifted. Now, let me go over also the Nikkei to remind that, you know, Nikkei has done absolutely nothing. It's actually trapped between 22,000 and 23,000, or likely not even 22,000, because we also have this ascending trend line support to take into account. with the exception of breaking through it for a few hours here, I mean, near the end of the day and next day, we immediately moved above it. The market seems to be respecting it. So, Nikkei has done absolutely nothing. And I think that also this is a good indication of why we shouldn't probably be expecting too much yet having to do with the USD yen, because you see, I mean, we had a very strong day lower yesterday, and I have to say that I insist in the fact that if you are to do something with the USD yen, it's probably sell it. Yesterday's candle in combination with the past two candles, so the last three candles constitute like an evening star formation, and there is absolutely no question that is a bearish candlestick formation, and quite a potent one. Regardless, we're seeing a rebound today. It's more likely that this is going to be a rebound worthy of selling. I would be watching this 111 zone. If you go to a short-term chart, you'll see that it is, a resistance. It was supported as a resistance. So I don't think that this changes much. I think that after yesterday's candlestick, probably the next short-term move is lower, with support being at 110. Now let's have a look at the DXY. I don't think we did that yesterday, so it's not a bad idea. DXY still holding above this previous triangle support, because the triangle got broken to the upside. We came back, we retested the support. So this trend line support seems to be working in general, and this is 95 zone is also horizontal support resistance area. We've spent a lot of time oscillating around it or on top of it. But I feel like that even if we get a short-term bounce a little bit higher, there is still one leg missing lower for the DXY. So I wouldn't really be jumping the gun being long the dollar. I think that the dollar, even if it strengthens a little bit for a few days, I think there is more weakness ahead to at least complete one more leg lower, even if that proves to be corrective, and then we get a bigger rally. And if you think about it, that's exactly the same thing I said about the euro and the pound. I said that even if, given the fact that we got some decent overall numbers a few minutes ago, that might lead the euro and the pound to to depreciate a little bit against the dollar. But I do think that they should strengthen somewhat more before even having the opportunity to move down again. Stelio, will you help me by giving me a few questions from our friends?
Yeah, we don't have that many actually, but first of all, I'd like to say thank you to our friend Stephen, who's put a couple of comments regarding your connection problems, and he even put a nice article. I've sent them both to you, so you can have a look later. Thank you, Stephen. Let's have a look. Hold on. Let me go away from my daughter.
Although I doubt he's not aware of the complications, so I doubt he. For example, I only have problems when GoToMeeting is running, and nothing else, no other program or whatever. So I've run a billion speed tests. Everything is perfect. I have no indication that anything else is wrong. But only when GoToMeeting is running, things go bad. And the fun part is that it's not computer associated problem as it seems, because an Apple MacBook behaves in the same manner as Windows PC when GoToMeeting is running.
We will see. We'll fix it eventually. Okay, so we only have a couple of questions actually so far. So one of our friends is asking to have a look at the Swissy and why we think it's been strong recently against most majors.
Yeah, absolutely. By the way, before we do that, let me say that the Aussie is breaching this 7150 support area that we had held here for 4 days, whatever it was. It's attempting to break through now, but I wouldn't be jumping the gun here, because at 71, so just 40 pips below where we currently find ourselves, is the 161.8% extension of the last corrective move higher. So, I would be a little bit careful here. I think that, the Aussie can still get supported at current levels. And let's have a look at the Kiwi. Kiwi is once again pushing the previous lows. But here as well, keep in mind that 65 cents is a level that gathers around it like three different support areas. So I think that selling down here doesn't make much sense, because 65 might actually help this pair rebound as well. So we had a question about the Swisses. So let's begin by saying, and I have been saying that for a long time, that definitely a factor that helps the Swiss strengthen is this. What is this? This depicts the critical rejection that we got from testing the 120 area in the Euro Swiss, and we got quite an impulsive move lower. Then we got a pennant, and after breaking below the pennant, we're getting follow through, and minimum expectations, in my opinion, is like this being an ABC of some kind, in which case 110.70, so we have still some distance to cover, like 130 pips to that level, should or would, I guess, act like a magnet. So we still have some room to move towards that. That obviously spills over to the rest of the Swiss pairs. Now, why the Euro Swiss in particular has been strengthening, one of the reasons that definitely recently have helped it, very recently, is the whole jitters that we had. First of all, some time ago it was Italy with potential contagion risks, because I remind you that we had this big uncertainty, what's going to happen, what kind of a government are they going to form. Then we got the choice that they had having to do with financial minister being rejected by the president in Italy, and there was a lot of speculation that we might go into fresh elections in which the two extreme parties that actually form the government might get even a higher percentage. And anyhow, initially it was Italy, and then we had the jitters having to do with Turkey, meaning if Turkey's banks and the economy in general starts imploding, there's going to be spillover, because several countries in the European Union had and still have exposure to Turkish assets. So if you're looking for some macro factors, those are definitely a couple that have played a role. Stelio, is there something I'm not currently considering?
No, I think the main thing is flight quality when things look difficult, in the global arena. So yeah, I think that was the main thing. So
okay,
I don't have really anything else to add.
So yeah, that's the situation. Having to do now with the USD Swiss, I have to tell you that this 96.50 is horizontal support area. We're seeing a nice reaction from it. Not too much yet, but we do see another reaction from it. Because intraday we actually retested it last week. So selling down here doesn't make much sense. We might see like a big rebound. But as I said in the previous time that we rebounded, the first area that the bulls have to clear to actually start doing something is 97.50. And in the previous attempt, they failed. Okay. So, this remains to be the case unless we see like, a breach through the 97.50 support resistance area. I don't think there is much of a reason to turn bullish. So we might see, a bigger move lower. Now, having to do with the euro yen, it was like yesterday, early in the day, that we said, looks like euro yen might push lower once again, and then perhaps we're going to see another push towards the 130-150 area before we see some more weakness. So I stand by that. I think that there is a decent chance that we're going to see more strength coming through from this market before we actually resume pushing to the downside. So this hasn't changed at all. Stelio, any other question, by the way?
Well, we actually had the one on the euro yen you just did, and we also have a question on the euro kiwi. Did you go? Did you do the euro kiwi as well?
I'm gonna go through those crosses. Very gladly will do so. Euro Aussie broke above this previous high. Next target, I said that if that happens, next target is the 127% extension. of this move lower at 164.40. Euro Kiwi, as we've said, remains bullish. Why? Because it's breached through confluence of resistances, which we were finding at 174.50 roughly. Three different resistances actually, and that's what actually caused the market to get rejected once from that area, then pushed back at it, stalled for a couple of days at the same resistance area, and then finally made it through. So Euro Kiwi is bullish, but I was saying, and I will reiterate here, I don't see the momentum that would really get me enthusiastic about, buying it. I mean, it's in essence under some constant bid, and it's creeping higher and creeping higher and creeping higher. But there is a distinct lack of an impulsive momentum that you would want to see to feel even more confident of buying something that has already moved decently, thinking that there is more coming. So Euro Kiwi bullish until proven otherwise, definitely bullish as long as we remain above 174.50. So in my opinion, 174.50 is now a key area for the pair. But other than that, I wouldn't be doing something with it yet. Okay. Now, the pairs that have actually been soaring are Pound Aussie and Pound Kiwi. I had said that my preference is Pound Kiwi for one reason, because the technical formation that we had in hand here was very, very clear and easy to read, right? Why? You can see the two red lines. I can, highlight over it. Symmetrical triangle, textbook symmetrical triangle. And as I had said, we entered this symmetrical triangle coming from the downside, spent quite a lot of time oscillating here. We're breaking to the upside, which is what you should be expecting to be the higher probability scenario in this case. I think that 20170, the 127% extension of the maximum range of this triangle, should eventually get hit. So I like it. I think it looks good. It behaves properly. We've also seen like a very big reaction from the Pound Aussie. There's no question about it. But the Pound Aussie from a technical perspective was a little bit more mixed, right? So you can see it here. I mean, clearly the move lower was not impulsive, so it had that going for it. But you didn't have such a clean formation like the symmetrical triangle we had in the Pound Kiwi. Now, speaking of the Pound Aussie, be careful here. We're testing these ranges. This range actually marked, the top, and which produced this corrected move lower. So this was the area we're currently testing. Was that range's support might now act as resistance, given the fact that we've already shot higher quite aggressively on the day. I think this is probably an area the market is going to hold to close the week. So starting next week, we might see first a pullback from here before seeing more strength. In any case, I would be monitoring this 179.40 area for support. I think that it was support. We breached below it. It then acted as resistance. So it might act as support once again, because the market has in quotes memory for levels that were important in the past. Why? It's not some kind of a magic ability. It's simply because there is a lot of open interest usually in these areas, right? And market participants might defend them, or simply them trying to square positions might produce some kind of reaction from them, etc. Stelio, any more questions?
Yes, I mean we have 1 minute left. Let's have a look at the USD Mexican peso.
Yeah, absolutely. Yeah, absolutely. I was saying yesterday that this looked like a very healthy rejection. I mean, it's exactly what we were expecting to happen, and it did happen, like an ABC move. 50% fib got tagged. We also reached the equality target. Very nice rejection. Yesterday completed an evening star formation on the USD MXN. I think that there is a very decent chance that we're going to see some follow through in the week ahead. I'm waiting to see a little bit, more price action, but I like so far what I see. So I do believe that there is a good chance to see more downside, right? Of course, that scenario would be very much helped if we do have some good NAFTA deal. There is no question about it. Now, I asked this question on my own like a week ago. Is it very likely that we're going to see like USD CAD pushing higher and USD MXN pushing lower at the same time? Yeah, usually they're decently correlated with each other, but sometimes this can happen as well. And from a technical perspective, as I said, USD CAD looks good for more upside at the moment. USD MXN looks good for more downside at the moment. And given that, I have to respect what I see. Now, on the other hand, if you believe that this dynamic might play out, there is also the possibility of playing the cross, right? The MXN CAD cross, because that's the beauty with FX. It's not that you only have like some of the well-known and very popular like crosses, but you can actually mix whatever currency with whatever other currency you want. And if you have a decent broker, you should have a decently liquid market to trade those as well. Dale, do we have a guest today?
Yes,
Dale?
we do.
Oh, okay.
Miad, my trading warrior brother, Miad Kazravi is with us.
Perfect.
He interrupted his vacation just to be on Face. How about that?
Perfect.
All
great,
right.
Great. I wish him a good resumption of his vacation in half an hour then.
He'll resume, yes. Okay, Steve. Thank you, Stel. Guys, have a great weekend. Miad,
You too, Dale.
Thank you very much. And Miad, thank you so much for making this. We could have rescheduled it, making it important enough for you to interrupt some leisure time, which we all need. How are you, brother?
Hello, Dale. How you doing?
Good, good. So where were you vacationing that you had to come home? Somewhere in Scotland, where you live?
Yeah, it's somewhere around Scotland. It's called Saltcoats. It's sort of like beach area, chilling out with the kids. You know it.
Nice, nice. So we haven't talked for a while. It looks to me like you have, is that a fairly new website? Different business model? You have a partner and you're mentoring and teaching people? Is this fairly new?
We're a little bit expanded there, yes. So we have a bigger team now, a bit more people joined, and helping out to reach more people, helping out to get the, sometimes when you analyze, you're so structured and just doing your work, you kind of lose sight of actually feeding it into your audience as well. So I've got a good team together now to help me doing that a little bit more concentrated, not necessarily marketing, but concentrated, making the stuff I do a bit more relatable to everybody, if that makes sense.
Right, right. So do you want to make sense of the US dollar Chinese yuan during this potential trade war worsening with new sanctions most likely coming on again next week, another 250 billion. We've had a little respite from almost getting to 7. Do you think the Chinese are going to be able, they did something to take the downside pressure off the yuan a few weeks ago or so. It doesn't look like it's that effective, at least for now. What's your view? There's so many currencies on the FX oven bubbling that, one day it's Argentina, one day, it's a lira, the yuan. What are your expectations with what's happening with US dollar yuan? Are they going to weaponize it some more? Are they going to try and control its weakness?
Great question, Dale. So what's been driving the US dollar throughout the year? Well, a lot trade war, but a lot it was US repatriation. Last year, Donald Trump gave them literally cash, tax-free repatriation. That means if you have a company abroad, You made some money. You're gonna bring that money back home, and there's no tax, no questions asked. So it's obviously going to create billions and billions. Actually, over 450 billions from what I've read lately that repatriated back into the US. So regardless of what would have happened, I think you would have seen the Dixie outperform.
Okay.
We recently had some more reports that there's still some more money coming back up until about November. So that's still an upside pressure for the dollar. On the other side, obviously, you have the trade war, which means whenever something happens, you find that dollar is getting a bit of a safe haven bit. Regarding the yuan, what have they done? What the Chinese, what the PBOC done basically? They've made it more difficult, more expensive to speculate against the yuan. That doesn't mean that people who have got money in China can't take it out. They still can do that, and they probably will continue doing that if they see the business there is going to die down a bit. On top of that, you also have that China started to they're trying to build a bit more boost the infrastructure. That means they're going to be spending some money, provide a little bit more liquidity, and naturally that's devalues the yuan by a bit. So that 7 level, in my opinion, I don't see why it should hold at all. It won't be the rise shouldn't be as dramatic going forward, but I don't see why we'll hold it all. And the Dixie should move forward a little bit higher going into November. That's my base case, and that's how we've been trading it all the way.
Okay, so into November, so we have what, about 5-6 weeks. Are we going to challenge or take out the Dixie 97 high? What do you think?
That would be interesting to see. That would be very interesting to see. Technically wise, it looks very heavy up there, so I would like to see how it's going to work out. However, I don't feel like we've topped out yet at all.
Why do you say November? The midterms?
It's the midterms, so we find that once things die down from the end, I feel like trade war is going to come to some sort of conclusion. NAFTA by then, I believe NAFTA by the end of this month would have come to some sort of conclusion. And market already starts pricing in the themes for next year, which are most likely going to be pound bullish, euro bullish, and should hammer down the Dixie by a bit as well.
Okay, so the pound has really kind of come to life in the last week or so. Do you think there's going to be a Brexit solution? I mean, isn't Scotland part of the whole mix over there, or you're independent, or but
no,
I know you keep
tabs
on it.
Yeah, we're all part of it. What happens is, as somebody who lives in here, you obviously get frustrated by all the news. There's little going on. You feel frustrated by your PM. She's not very effective in what she does. However, I always look at it from the perspective of an investor. If an investor feels that there is a risk of Brexit, of a hard landing on Brexit, they're going to price that in. They're not going to start pricing in a positive effect. That's why you see a lot of pressure on GBP. You've seen downside protection in the options market, which I usually look at when I want to see where currencies are driven. Until lately, where Barnier made some comments, downside protection has been picking up consistently. Hence selling pound was a bit easier. Now with the picture a bit more foggy, you might see pound a little bit consolidate. But as long as these options pick up on the downside protection, so will Brexit. Again, as an investor, you want to price in the worst. You're not going to go all euphoric on it.
Okay, what strike prices have the largest open interest? Where's the
I think we were at 1.7. I think we were 1.7. It dropped to 1.4. I think before we dropped. Before I opened it, I had a quick look. I'd like to see how this develops, obviously, over the weekend. I don't feel like, however, it's going to the strike price is going to neutralize anytime soon. So options to the downside or put options going to be a little bit more lucrative still until there's literally some black and white written.
Okay. Do you mind if I switch gears? Do you still have family in Iran?
Yes, I do indeed.
All right. So what's it like on the ground for your family with everything that's going on there, the currency falling apart and President Trump putting pressure on them so that he's trying to get people not to buy their oil. There's been a lot of unrest, not just the elites, but throughout the country. What are your relatives telling you about what's happening there?
You find that inflation picks up dramatically. The rial, which is the Iranian currency, dropping significantly. So it's getting devalued day by day. And the country, the government of Iran cannot hold this back because they don't have significant foreign reserves to do that. Which means they're going to keep on dropping. It's not tradable for us Forex traders. But
Right.
from my perspective of view, if you wanna help out the family with sending money over, it's much easier now because it's much more valuable. If that makes sense.
Okay. So, you know, they still have open borders for support where you could help your family out. So is bread like tripled in prices and just your basic staples, like what's happened in Venezuela and some of these other countries?
Just
Okay.
to out my mouth, yeah. So something like Venezuela is right now happening in Iran. Obviously, what the US and also partners trying to do, they're trying to get them down to a negotiation table where they can do sort of the same thing they've done with North Korea. Problem is with Iran, because the population is much bigger, the country is much bigger, and they've got significant oil resources, that can go on for years and years before the government will crumble to anything.
Okay. All right. Well, I thank you for that. And, my heart goes out to the people. You know, sometimes you know, sometimes even in America, you could be subject to tyranny. So, you know, when there's tyranny, and you know, we haven't felt any kind of currency crisis, but let me ask you something I haven't talked to you about ever. Can you wrap your head around crypto, Miad, and what are your views on it? You know, we talked about it was a bubble because it declined 80% from the highs. What are you telling your students? I know people are probably asking you about at least Bitcoin. What's your view and philosophy on cryptocurrency?
So when I picked up on crypto, trading it actively and then falling out, and it all happened in January this year. So we started analyzing in December. We've noticed there are fundamental patterns that play along. So we started buying into XRP.
What's that, Ripple?
That's the Ripple, which was quite good. It topped out, I think, 370, 360, thereabouts. We had to scale out of there. And the thinking back then was that this can move up to 5, but then obviously then the problems that happened with all with BitMEX and all these other companies in Japan, they were dealing with the cryptocurrencies that you've started to notice that the safety levels are extremely low. Everybody's trying to get out of it because of that very reason, and funding was trying to dissipate. So now whenever we try to play Bitcoin or all these other currencies, we try to look into these impulses where some positive happens. I don't know, there was an ETF supposed to happen, or I believe Goldman Sachs was supposed to open a crypto desk. So these are these positives. If you see these happening, you buy into that, and when the euphoria of it dies down, you can sell into it again. It's because
right now, what exchange did you use? What crypto exchange did you use to make your trades, and do you feel comfortable leaving funds in there overnight?
I'm afraid none. I purely play it through CFDs. I don't own any cryptos. I'm not looking to add any either. Okay.
All right. Why don't we get to the commodity markets right now? Any views on?
If you don't mind.
Go ahead.
There's a big thing lately happened in the gold market that on the CFTC report it showed that there's been extremely shorts. But it doesn't mean they can't add to the shorts, but it also means you want to have a look at what could drive these shorts more. Why would a bear add more to his position at this point? And always I like to look at, when I look at big swings on gold, I like to look at that gold ETF. It's traded on the ASX, the Aussie market.
GLD.
That's it, and it is the monthly candle. I don't know if you can see my screen. That is
got it.
There is a monthly. You've had a trend line quite picking up for several years, since 2013, and up and down you were able to quite catch this quite good. Last month we had this nice pin bar. It doesn't mean it's going to go up to the moon, but it means there's something happening here. So we had a hard sell-off, and we had a bit of a rejection. That coincided when the time that Chinese delegates went over to America to start talking. So you can see there's a bit of a relief. Market is waiting to see what happens with those tariffs. See, even if the 200 billion tariffs go ahead, they're going to happen in tranches. They're not going to happen all at once. So their timing is going to be key for market to start pricing things in like that. So that'd be very interesting to see if that's going to actually manage to pull away, or if you're going to have to crash down on that trend line altogether. So it's something looking at.
That's interesting that you brought up the monthly like that, Miad, because, you know, when you look at shorter term charts, it looks like it was waterfall decline for a while. And you go out to your telescope, and, you know, we've been sideways since 2011. That's it. No bear trend. I don't see a bear trend yet. If we took out that monthly low, then we could get smashed. But so far, it looks like there might be a chance for a little bit of a relief rally here. Is that what you're anticipating?
I agree, especially if the 200 billion tariff is not going to come as aggressive as everybody thinks. If it's going to be not so harsh, I believe the gold bears who are holding a lot of short positions have less incentive to add or even probably to cover, and that will drive that back up. So that's the ETF. Also have the gold itself. I was actually short in the beginning of this week on gold myself, hoping that we're going to catch somewhere 1180, because I know.
That's where I'm looking to buy it, under that low. It still could get there.
Well, I hope it does, because I know that a lot of Indian physical gold buyers have great interest in that level, and it's more of an organic move that you should shoot up from there rather than just playing the levels. So we're kind of monitoring and see what happens around this level by also looking at what happens on the tariffs. That doesn't mean that dollar and gold can't rally together. It happened before. But you know, it needs a bit more. I wouldn't go mad bullish on it, but I think there's a trade to make.
What's your green dotted line represent at 1283? A target?
Let's find out. I have always these ghost lines, and I sometimes forget what they are.
Wow! It's not even Halloween yet. Halloween's at the end of October, bro. And you have the ghost on.
A couple of months ahead of you.
Yeah.
That represents a level where I'm thinking we're going to see some reflection if you're going to have a pickup in there.
Okay.
That looks to that. Last thing I wanted to talk about, another thing I wanted to talk about, gold. I think I'm going to be following the ETF, gold itself, and also AAU. I highly recommend checking out that chart, because it seemed to be very moving aligned with gold itself. Another thing I wanted to talk about is USD CHF, or probably franc in itself. Something interesting happened.
Oh yeah, that's a favorite of yours. Yeah, you talked about it last time. It's one of your favorites. It
is indeed. Yeah, I love that. I love it a lot, because when it moves, it just starts moving. It doesn't bounce about. It literally gives you clean big lines when it starts breaking out. So you had this consolidation for quite some time, and while the consolidation was going on, what I always do is I look in. Consolidations eventually break. We always know that, and they sometimes break with good force. What I'm always looking at consolidations like on these box movements is where are the hands? Who's buying? Who's selling? What are the reasons for buying and selling? And what is the narrative? So my colleague or my trade associate, his name is Leo. He wrote a trade analysis. When was that? That's actually my website, by the way. If you'd like to check out the trade of the week, quite handy.
People. Okay.
Quite handy. It's free of charge. We don't charge people to check out the trades. We don't make money from signals. We just want to get people in that pay for the course itself to learn. But back onto USD CHF short, there was in the sort of first week of August where Leo pointed out that there's a COT signal to go short the USD CHF, and I also figured out that the SMB is starting to deleverage a little bit, so they're cutting down on their balance sheet. And I'm going to show you the balance sheet from the Swissy. And the forecast for the next month going forward is a little bit lower as well, and it's been slowly declining since April. Picked up a little bit in May and July, been declining. What that means is that the Bank of Switzerland, or the National Bank, is deleveraging. They're selling their assets. And when they sell assets, they bring francs back in. So you have an organic franc appreciation.
Like the Fed, so that's been behind the dollar rise too, with the Fed selling assets.
Bang on, exact same thing. So we have the sort of consolidation. You have a nice long-term sell signal from your COT analysis. They also know that the bank is selling assets to drive in CHF. You got a nice organic move lower, obviously, and so the trade worked out nicely, and I believe it's still got a little bit leg to move to 94. That's the sort of stuff we look at when we look at trades. We try to get the whole picture together, see who the players are, see who's got more money in the market, who might be scared or who might be euphoric to add to their positions, and then we find those trades.
Okay, COT is a very important part of your analysis, isn't it?
Absolutely.
Okay, So anything you want to wrap it with? Why don't you show your website again and the best way
Another
for
thing I
people
wanted to show.
Oh, sure. Go ahead, buddy.
One thing was on our own website, probably knew that from before. Speculators trading is when we have offers.
Okay.
Again, offers is limited to just teaching people how to do it. If we're just looking for signals, signals are free of charge. We don't want signal seekers down in our program. When people who are enthusiastic about learning how Forex market moves in the longer term in commodities. Also, the forexleague.com, who's my partner Alex, what he does and what me and he do, he's providing the technical analysis, and I do usually weekly sort of forecast of what we're looking at for the week ahead. You can go back for the last few weeks since I believe he started in about April. Might I say they've been quite consistently precise in what happens. I've tried to emphasize why things happen, so it's a bit more fulfilling knowing the logic behind news. And,
yeah, because then that's the only way people learn. I mean, if they just blindly take a trade, they wouldn't know how to repeat it if the same setup occurred.
Exactly, Phil. That's right.
Okay. All right. Anything else you want to cover here, buddy?
Big thanks again having me here. Big thanks to yourself, Dale, Blake, Daliatos, and all the people down at Face. Great people. I always read your stuff and always try to contribute where I can as well. Again, thanks for having me here. Hopefully it's going to be soon back here with you again. And if it's okay with you, I'm going to shoot away and go for the rest of my holiday.
It's a deal for you to come back, my trading warrior brother, and I give a full-throated endorsement to your ethics and your effort to educate and teach people and give them a straight deal. So I'm a fan. I root for you, Miad. Thank you very much.
Sir. Thanks a lot.
All right.
Goodbye.
All right, buddy. Okay, Faith,
Bye.
that's it. Have a great weekend. Don't just count your pips, count your blessings. Enjoy the football this weekend. I'm going to try and get over my upper respiratory infection. I guess I'm not used to taking vacations. I get sick. So that's it. Thank you, everyone. And Friday is a great time to join ForexAnalytix so that you can navigate and be ready for all the action next week. I want to thank Steve, Stelios, Grega, Andre, Joe, Amanda, Blake, Paulie. Great initial week from Paulie. I don't know if I missed anybody, Grega, but you know, where could you find this much talent on one site? I challenge you to show me. I'll go check it out. And with that being said, enjoy your weekend, everyone. Thanks again, Miad. Check out Miad's work. He's very good, elite at what he does. See you later.
Take care, guys. Thank you. Bye.
All right, buddy.
Cheers. Bye.
Cheers.